Evening from Hong Kong, or good morning to you, depending a little bit on where you are. Fantastic to have you guys on the live chat here, guys. This is an interactive session, very much so. I, as always, welcome and encourage your questions and comments. And while I might not be able to get to all of them, I will do my uttermost best to do so. And of course, I have to somewhat prioritize our members and Patreon members. So, guys, thanks for your support here. Bob, great to have you on the chat. Lily, I can see here too. Fantastic to have some familiar faces here at the very beginning. So what I want to talk about, well, I'd like to talk about Nio, of course. Now, there is a news item out here on the chip shortage and why that can be actually good for Nio and EV companies. And secondly, China's second session, or the two sessions rather, which is that great big sort of government get together that's happening in Beijing at the moment. Thousands of legislators are there. They again have formulated a new manufacturing plan with a huge budget to support certain industries, and guess what, EVs are in that. So we're going to look at that very briefly, and we might also want to have a quick look at just what Nio did on Friday. There's some interesting bits in there in the technical analysis in terms of momentum change, sort of halfway through the day around 2 p.m. or so. So we'll have a quick look at that, and again also touch a little bit on this Nio second brand, and how can that work? Is it a sort of a Toyota Lexus kind of a story or not? That's what we're going to look at, and sort of just see if can we see from the TA whether we are really at the bottom here or not? Before we get to that, guys, I think let's do a quick look at inflation. Quite a lot of you guys have been sending me questions and asking about inflation, what to do with inflation. Am I worried about inflation? And I'm going to keep saying the word inflation quite a few times here. So if you do a sort of quick Google on, what are good inflation bias, you see things like this. Treasury inflation protected securities. To me, as always, guys, this is not financial advice. This is just entertainment. But from my perspective, they look like horrible things to invest in. They're basically government bonds that are linked to the inflation rate. So you get an average 2.45% over the last 5 years. There are few things I can think of that have done worse than 2.45% over the last 5 years. So I think really we should have a quick look at that, and not at tips. Don't worry, I'm not looking at tips, but let's have a look at really what's going on here. So if you can see on my screen, yeah, you can see it, wonderful. This is the CPI. This is the inflation measuring index that the US government has, basically. Lots of you guys joining here. Fantastic to have you on here. James, Kevin, Mint, Blueberry, Lily, James, Alan, Brian, lots of you guys total buying this 7-layer dip. Okay, great, thanks. So we're going to spend about 3 minutes, I'd say, on inflation, and then we're going to talk about Nio, and then we can, of course, get to your questions depending on what you want to talk about. So this is basically from about 2000 onwards inflation, and it's gone up 53% in 20 or 21 years or so. So inflation has just been very, very low at a pretty much more or less the same kind of level. It's flattening off a little bit here at the end, but not significantly. Now, what's causing that? People are worried about the government printing money, and the US government, if you are in the US, guys, your government has created 20% of all the world's US dollars in circulation in the last year. That's a fairly frightening figure. And you can see that here. That's the orange chart there. Can you see where they kicked off? They kicked off here, 1st of March. That's when they started printing like there is no tomorrow. And can we move that a little bit? Here we go. So you can see that there. So that has just gone absolutely tremendously. And I don't know if I can make that. Can I make that in percentage? Yeah. So you can see on the left-hand side here is the percentage scale for money, M2. And on the right-hand side is the percentage for inflation. So inflation over these last 21 years, since 2000, has been 51%. Money created is 292% up, of which quite a lot of it has happened in the last 12 months. You can just see the incredible trajectory here that we see here. I'm just painting next to it on purpose. You can still see my line. That's what's been going on here. So has that caused inflation? Well, no, so far it hasn't. If you look back a little bit over time and look for points where let me get another arrow here, where we have had increases in money printing, and you can see some here, for example, That was in 2008, which makes sense, right? Recession, and then here in 2011, you saw them there. They increased the rate at which they're printing money. Now, economic theory, what I study is that they teach you, well, that inflation kicks in a little bit delayed. Well, quite frankly, I don't see it. And I just don't think it has caused that. I just don't think increasing M2 causes inflation. Why is that? Because this money doesn't go into the real world. You know where it goes? It goes here. Now, what if I just call up that blue chart there? Can you see in the background that light blue chart? That is the S&P 500. That is where it goes. So if you look at the orange line and the blue line together, to me, that is correlation. Because you can see as it picks up here from the money printing on the 1st of March, where I put that red line, that's the kicker where the inflation started kicking in from. And then if you, can I zoom in on this? I think I probably can. That is where you see then the market recovering very shortly after. There's a slight time lag, I grant you that, but that is really when we start seeing this recovery, and those two to me are very closely correlated. Inflation, quite honestly, I'm not worried about inflation one bit. Yes, we have lots of money around, but you know where it's going? It's going into assets. We have asset inflation. That's why the S&P 500 is going up, so very, very quickly. It is going up in line with the M2. So the orange line is M2. That turquoise light blue line is the S&P 500. That is going up together. Yes, you have some zigzags of the S&P 500, but if you average that out, if you smooth that out just a little bit, which I haven't done, as I say, on a day-by-day basis, then you would get a pretty much a flat curve that looks very, very, very similar. It already does to the M2. So therefore, if you are worried about inflation, where should you put your money? In a sock under your bed, in a drawer, in tips that give you 2.45%? Government bonds. What do you think I'm going to suggest here? And as always, guys, of course, this is not financial advice. Do your own research. Stocks. Simply put it into stocks, because you got the correlation. If there's more M2 money, the stocks go up. It's as simple as that. Therefore, I don't think we need to find, as a lot of people are talking about, writing about, we don't need to find inflation beating stocks or anything like that. Buy the index and you're done, basically. That's my take on it. And of course, I'd love to hear if you disagree with me on that. And we have a nice sort of chat about that kind of stuff over in our community here and on Discord. We are exchanging lots of things here and on all sorts of stocks. So do come and join us there. And then you can, of course, also ask me questions and chat to me whenever you want. And I post a lot more information over there as well. So do check that out. But fundamentally, I don't think this is a complicated question. If you have a lot of cash, yes, that loses value. Any asset group pretty much doesn't. So stocks, bonds to some degree, but not as well. Real estate, certainly, a lot of money pours into real estate. I don't know if we have an economic, do we have a real estate? No, it's a little hard to find here. I'll try to find a real estate tracker, and I'll put that up later in the Discord group, and we can do the same kind of tracking again. But I'm pretty sure that's going to be very, very similar. So you basically, the people who get this money are investors, Wall Street, professional investors, people with money. They take the M2 government printing essentially, and they leverage it. They therefore make more out of it because interest rates are essentially zero, and that is what's fueling our stock market rise. So. Brian says that we should put it in a sock. That's always a good idea, Brian. And you don't care about inflation. I don't expect inflation either. I really don't. Real estate, you say it's a headache. I thought that for a very, very long time until a very good friend introduced me to how to do it. And it is absolutely no headache at all. I'd say I probably spend, I would say, 2 hours a year on it, from a practical point of view, and that's about it. So it really absolutely no headache at all. It just depends on how that's structured. So that's my quick inflation pep talk here. Basically, stocks, I think, are the answer. That is also what our fluffy goats and creatures say. So guys, do hit that like button. donate 1 cent for every one of your likes to the gentle barn, all these lovely fluffy animal creatures here, who are also our channel mascots here. Here are the goats. You see lots of goats on the chats. If you're wondering why, that's why. That's where we're donating money to. Now, there's a very interesting article that just came out this evening in the South China Morning Post, and I think it's worth running through briefly. So basically the headline is electric cars may get the chance of a lifetime, let me put that down a bit so you can see it, to replace petrol cars as fastest because of the chip shortage. And it goes into some detail here. Actually, for once, a good article for the South China Morning Post, who happen to be Alibaba owned, by the way. So it says here Chinese assemblers of EVs. That's a good, nice way of describing it, isn't it? Nio, Xpeng, and Li have said they have enough chips to keep their production lines going for the foreseeable future, and may come out of it with a bigger share of the market as they're displacing ICEs faster. Why? Well, apparently there are going to be 700,000 less ICE cars produced in Q1. Why? Well, Ford has got a lot to do with that. They're slashing their first quarter rollout of their F-150 trucks by 20%. GM are down in Kansas, Canada, and Mexico until mid-March. That's going to cost them $1.5 billion to $2 billion US. That has a huge piece on it. Why does it not affect the EV stocks as much? We heard from Nio, they said we do have a stock, a chip shortage. We can make 7,500 EVs per month. We can't make much more than that because we haven't got the chips. So why are they able to get their hand on them and not the ICEs? Well, there's a big difference in the type of chip, and it explains that here. So what you find in an EV are basically high-end chips, AI processors that make complex tasks, and they cost about $100 US a piece. What is in an ICE are lots of $1 cheap, simple chips, and they move, simple stuff, air conditioners, lighting, doors, seats adjusters, all that kind of stuff. They do that. So they're really, really basic chips, a sort of on and off chip, back, forward, that kind of thing, and all sorts of other things. But essentially, the chips you find in an ICE are these microcontrollers. Now, microcontrollers, and that's quite interesting, I think, here from an investment point of view, because we did look at semiconductor plays a day or two ago on one of our lives. You have Renesas Electronics, NXP, Infineon, and Cypress here, basically dominating that market space. That's pretty much the, 80% of the world's market, these 4 companies. But these are the little chips, and they are not really what EV companies are looking for. Why? Because they have big chips on there, basically. I'm really simplifying here, aren't I? But you get the picture. An EV chip costs $100. One of these microcontrollers is $1 US. So Taiwan Semiconductor, by the way, world's largest foundry, biggest supplier of microcontrollers used in automobiles. Now, we are told here that, well, China, for example, makes 25% of all the automotive chips in the world, still the world's factory there. And we are told that in here somewhere, the shortage of chips will not just be a short-term pain for the global automotive industry. It'll take at least 2 years before global car makers and semiconductor manufacturers can work out a solution. So these micro ones, the little $1 ones, are basically going to be in short supply for over 2 years, possibly, or as long as 2 years. The AI chips apparently are easier to make. Now, you could also see that the chip manufacturers have an incentive to make the chip that's 100 times more expensive. I imagine the margins on that thing are better than if you're making a pretty standard generic $1 chip. So that is actually an advantage for the EV sector, because it means that you take off about 1 million cars that are meant to be produced in 2021, ICEs, that will not get manufactured. So you are creating a bottleneck for ICEs. Why the EVs, there are some bottlenecks, but they're not that serious. Tesla isn't saying, look, we're not going to produce in these factories till March like GM is. It is a much, much smaller issue. It causes some delays, but it's a much smaller one. And I'll post a link to this also, guys, in our Discord, because there's some interesting information in here. For example, if you want to get a feel for the Chinese automakers, here they are with their sales and capacity. SAIC, Volkswagen, SAIC, GM here being the really big player. And then you also have BAIC in here a bit, and a couple of these other enormous Chinese government-owned ones. Geely, of course, also in there, suffering these last couple of days. So here we go. It says lost production of 1 million units across the globe in the first quarter, actually, not the year, the first quarter of 2021. 1 million less ICEs made. I suppose that is a good thing for the air quality, but it is an issue. Here you have Nio's factory, a nice picture of that. And then there are a couple of nice quotes here from from Xpang, which I thought were worth going to it. So Xpang is saying here, the vice president, we're not affected by the problem because Xpang focuses on producing premium smart EVs with high-end chips that are not mass-produced. Our production volume for this year and next remains relatively manageable compared to some larger OEMs that would require far more chipsets. So the way I understand this is essentially in an EV, you have one kind of set of very powerful chips that handle everything, whereas in the ICEs, you have lots of the little ones, in your seats and in your display and in everywhere where there's something electronic. And so they're throwing in lots of them there, and because they're simple creatures and they're only $1 each, so there's no real need to save on that. So Xpeng here again saying we're designing our own chips with NVIDIA. NVIDIA, again, we talked about that, an interesting company. Falling off a cliff for no particular reason as well with the momentum here. So, these basically are not mass-produced chips. So the demand from startups can be met with ease, here says an analyst. So that is basically what William Lee told us. He said, look, as of 1st of July, we've sorted our chip issue. We'll have plenty. That's what he said. So I think that's kind of an interesting one there. Lots of you guys, members joining here. Fantastic to see you guys. Gary, Emma, good to have you on the call. Gary says, thanks for the Baba DCF. He's referring to the discounted cash flow model I uploaded a little bit earlier on our Patreon. Here it is, last post. If you also want to get a Nio one, I posted one yesterday, for example. So you're very welcome to download those off the Patreon, guys. There is always lots of information on there. Alan, good to have you on the chat here. 2 hours a year. Okay. Lots of you guys are chatting here, which is fantastic. Spanish John is talking about silver and gold as an inflation hedge. In theory, we haven't seen it, right? I mean, gold really hasn't done particularly well these last 5 years, really, right? I mean, they've rather underperformed. I quite like it as an asset group, but it simply hasn't done what one expected to do. And I think that's because fundamentally most people don't really believe inflation's coming. So there's also one other quick piece of news here, again from the South China Morning Post. And this is basically the 2 sessions with the government sort of convention there. And they have, we already know there is a very strong plan to be the world's leader in EVs and to have, a huge proportion of EVs sold by 2030, half of them or so. And it's very aggressive rolling out of infrastructure in China. But here, this is a new plan. Essentially, it's sort of the China manufacturing plan 2025, a bit the second version of that, because that sort of got criticized for being a bit, nationalistic and all that sort of thing. So they're kind of tweaking it and they're putting out a new spin on it. Essentially, they're saying we want to be leaders in high-end manufacturing. And so there are a couple of things in here that the Congress is focusing on: rare earth, special materials, robotics, aircraft engines, new energy vehicles, smart cars. So that's a big item here. And they're basically going to put a lot of money into this. They're putting here $30 billion basically into China becoming the leader in manufacturing. So not just mass producing, garments, that kind of thing that China used to do, but really being a technological leader from it, chips, robotics, AI, all that kind of thing. So the US government, Chinese government rather, is putting up US 30 billion funding that to boost competitiveness. And we have seen that already with the chip sector, where they're basically told anybody who can make chips, do it, and we'll basically foot your R&D spend. Just get on with it. So I think that's kind of an interesting story there. We were just talking about, I did do a Neo discounted cash flow model here yesterday, and also a Barber one just before this. And there are a couple of bits on Twitter which just give you a little bit of a feel for what's happening in China. So Kunming here area in China, they are basically requiring that all parking lots have a minimum of 15% of parking spaces for EV charging. So 15% of all these, they're going to create 45,000 new parking spaces. 15% of them will have inbuilt EV chargers, with, of course, have standardized plugs in China. And that's just sort of a show there of how bullish I think the government is. And Beijing is basically paying people to replace diesel trucks with EV trucks. And we've also seen that they've already done that with rubbish trucks, rubbish dumpsters. They are all going to be essentially EV trucks here. And if you scrap more than 20 diesel trucks, you get additional transport permits for restricted areas, because Beijing is very restricted in where you can drive because they are fighting air quality issues there. So Nathan says Bitcoin is the hedge, and you know what, Nathan, you're absolutely onto something there. I think all the fear of inflation has gone into Bitcoin. It's not just inflation, I think, that's driving Bitcoin. I mean, that is one of the fundamental advantages, of course, of Bitcoin is that you can only create so many, 25 million. But I think the other issue there is just a general, a bit of a rebellion against governments, quite frankly, and just a lack of trust, I think, in governments. I think that's got a lot to do with the Bitcoin rally there, which I think is likely to continue with some massive volatility. But I do think in the long run that is going to continue. We were actually talking about some crypto stuff earlier. I think we'll do another call on that. We were talking about here on Ethereum, but not just Ethereum, but really, did you see that Twitter is selling their first ever tweet? That's the sort of digital world we are, the NFT stuff that we're getting into. And I think that's actually super, super interesting. I think as an asset class, NFT is going to be a big one. And those are non-fungible tokens. And that's basically all pretty much run through Ethereum as far as I understand it. I'm going to study that a little bit more, guys. And if you are interested in that, do let me know. And we will do some more coverage on that. So let's have a quick look here at the TA. So this is Nio's charts day by day, and I haven't done anything to that. You can see we had pretty substantial volume here on the last day. Now you might wonder what I'm looking at, but you can see that here, those red bars, they're pretty substantial. What was that? 270 million, the volume there. And while momentum is improving a little bit down here, it hasn't improved a great deal. And MACD also still showing us a pretty negative story there. But what is interesting about this is the following. Well, for one, we put these lines in here before Friday opened. We did that together in a live call for those of us who joined us. And we put in this pink line here at 38.13. And we called that basically on the basis of it had been the lowest point once, twice, three times in recent times. And I sort of called that as a pretty solid support line. We then had the Fibonacci lines, of course, down here. And this one was at 31.98. Now, what happened on the day? We actually dipped as low as 31.98 or thereabouts, maybe a couple of cents below even. And then we went back up. And we went back up right just above our 38.13 support line. So it's slightly spooky and also quite pleasing to see that we were sort of right here with our TA for once. Not for once. I think actually Fibonacci is incredibly accurate. And I think support lines are also incredibly useful. So I do recommend you get into that. By the way, again, if you want to get links to these particular charts marked up as I do here, again, they are over on our Patreon and in Discord. So join us over there. It's a fun community, especially actually when the market is tanking and you're looking at portfolio and everything's red. It really is very, very nice to be able to talk to some people and see what everyone else is doing. It gives us a little bit of comfort, feel a little bit less lonely there. Now, what is interesting, and I don't normally look at technicals on a very, very short term, hour by hour basis, but what you can see here is that we had a bit of a change of heart here through the day, right? There was quite a big recovery at the end of the day. And that's also why on the 1 day, let me show you the 1 day again, you see that big tail hanging off the candle here, that big long line. I call it the tail. I have no idea what it's called, technically speaking. I'm going to call it the tail. I have cats, you can tell. That is kind of unusual. And to me, that is a bit of an indication typically of a bottom of a market, because it means you went quite low down and then everyone bought back in, and that's the kind of support that it bottoms out a market. And I've looked at a couple of stocks actually, and that's sort of what you see, not always, but quite often when you have bottomed out. Now, if we look back here at the 1 hour mark, you actually see that there is some positive MACD momentum here. You can see these little green bars there, the two little ones that I'm pointing out here with the arrow. And you can also see Williams R actually gave us a buy signal here, and I'm going to put a line in that. So you can see that this red line here, which I'm going to make green to differentiate it from the next line I'm going to put in, which will be red. That here was the buy signal. Now, the last time we had a sell signal was here. Where I put the now red line. So we got a sell-off signal on the 2nd of March, which was at about $47. And then we now have a buy signal here at about basically $37 or so. So about $10 lower. So actually a pretty good call on this hour by hour basis. I don't normally do technical analysis on an hour by hour basis because I like to look at more the long run here. But it does seem rather accurate actually on this particular case. So the question therefore begs is have we really bottomed out here? Is this the end of that sell-off there? There is a bottoming out indicator which I have here, which isn't really being very helpful here. It's showing the wrong thing, so that's not very useful. But we do have Williams R and MACD pointing at the same thing. We can have a quick look also at RSI, or that's pretty similar to how Williams R works, just a bit slower. So yeah, it's a bit slower. It's not quite there yet. So it kind of makes me somewhat hopeful, I must say. Now, the big caveat that comes with Nio TA always is Tesla. Because Tesla, basically, if they have a sell-off because, Elon has the flu or something, then basically the world market of EVs tanks. So that's a little bit the challenge here. But you can also see there is quite a lot of improvement here on an hour-by-hour basis through the day. They're not quite there yet where Nio was, but if you can see the MACD here, the each bar hour by hour is the sell-off indication momentum volume is getting smaller, very near zero. Williams R is improved quite substantially, but it's sort of flattened out rather than crossing the 50-point line, which is what we saw with Nio here. So not quite the same momentum there. But there is something there. Alan saying that might be due to the 10-year yields lowering around 12 p.m. Okay, that's a really interesting thought. Let's pull up our DGS10, it's called. DGS10. We can compare that and put that on here. Where on earth did that go? It says it can't do it. Why can't it do that? Okay, let's try line and let's try that again. On a new price scale, maybe. No, it says it can't do it. I don't know why it can't do it. Unsupported resolution. That could be my hour by hour basis. Is that it? Okay, let's try it. Just try DGS10 over here, and we see how quickly you only get this on a daily basis. That's okay. Chart technical problem here. Okay, but you're probably right there, Alan. That is around about when things started to improve a little bit here. From that point of view, although quite frankly, I don't get the whole yield thing there. So, but Hoxa, lots of thumbs up. Thanks very much. Emma said there was a rumor going on that Musk had died yesterday on Twitter. Well, I mean, really, help us all if that were to happen. I think that's hopefully not happening because that would really hit Tesla very hard. I think because that he's such a dominant figure there. Oscar, you're liking your thumbs up, or oh no, they're not thumbs up, are they? They're something rather different. In which case, Oscar, there's one thing I can do, and that is I can time you out. I have that power rather wonderfully. So there we go. We see your messages have all disappeared and you're timed out. So there we go. Thanks for sharing that, Emma. Well, thankfully that didn't reflect that rumor in the in the stock price there yesterday, really. Although is that perhaps why Tesla was down a touch more than Nio? Perhaps. Now, so I mean, you can't call bottoms of markets really unless you have passed them. I think that's, we all have to be honest with it. But I did think it was an interesting exercise to sort of show us that there was on that last day actually a change of momentum that was fairly significant to the extent that it called previous sell-offs and gave us now a better signals there. So I think really for Monday we should watch out for that. We should of course also watch other indicators like Nasdaq futures, for example. But at the moment they're looking rather happier here. They're up 1.68% or so. So that is somewhat positive. Volatility is actually down quite a lot, which is surprising. S&P volatility is down massively, dropped off 13% here. And the Nasdaq volatility also dropped off 8%. And falling volatility is a good sign. It basically means people are not betting on inflation. on a crash rather than inflation. Not everything is about inflation. Very difficult to catch the reversals, as Ali. Yes, you know what? I don't try. I mean, I would say as much as I never give financial advice for myself, I don't try to catch a bottom. It doesn't really matter whether you are a couple of dollars in or out in the long run. It really doesn't matter at all. And I think really, if you look at a bit of a longer term Nasdaq chart here, and just do that. And I think that kind of, let me get rid of our indicators down here and just see, what were the things we were really worried about. Say, for example, here in 2018, we've got that enormous green arrow for some reason. And I've got some more arrows here. I think where other crashes were, say, in 2011. You see these sell-offs there? That seemed really enormous at the time. Do they matter in the long run? I mean, seriously? Absolutely not. So I think that is always something to bear in mind. As long as we have stocks that we believe are not going to go out of business and that have either free cash flow or lots of cash sitting in the bank, or are of course profitable in the sort of businesses that people are going to continue to purchase from, then I don't think it really matters here. Philco, welcome to the chat, and one of our lovely members here. Fantastic to have you on here, Philco. Everyone is hypocrite says my chart says Nio 100 next week. You know what my chart says? My chart said that all of you have clicked the subscribe button and turned on the alerts. That's what my chart says. Apologies for mispronouncing your name there, Xiong. I'm deciding to pick up Neo, Tesla, and Canoe. These tips are fabulous. Look, actually, quite a lot of us were saying that on the Discord yesterday, especially in the Neo group. People were saying, I just picked this up at that price. Isn't this wonderful? Spring sale, spring, winter, summer, autumn sale, which is just kind of a nice way of looking at it. It certainly cheered me up. So thanks very much, guys, for being that part of that community here that cheers us up. So what else have we got to look at, guys? But we can do a very, very quick recap for those guys who've just joined us in terms of inflation. Basically, guys, I'm not worried about inflation. Inflation here is the M2, the little orange line here. I don't know why I've got the 10-year yield up here now, but that's neither here nor there. But really, essentially, there is a very close correlation if you chart it properly between the S&P index and inflation. And I've made a mess here of this particular chart, guys. What did I have on here before? Let's put up SPX. That's an index. There we go. And there we go. We can get rid of this one. And you can basically see there is a very, very close correlation between these two. Of course, you do have crashes in the S&P, but in the long run, you can see that they are essentially moving more or less in line with money supply. I think if you smoothed out the S&P 500, can we do that here? Can we smooth that out to say a week, maybe a month even? If you do that, there you see, okay, it's sort of now clings together because we're going back to 1878, which we really don't care about. But if we just go back to say from, you get these sort of overreactions here. This is the .com crash, of course, there, that one. But you can essentially see the government has kicked off our rally here from that point onwards. So for me, money printing is not an issue. It causes asset inflation, not real world inflation. And I'm rather enjoying asset inflation, I must say. So I'm really not against it, and I'm really not worried about that. Guys, if you have questions, do shout them out. I will get through them. We should be talking more about plans for Nio to expand in Europe, etc. Their success will depend on laying down charging infrastructure like Tesla. Do you think they have a plan to do this? Says Gordon. Yes and no. So from what we've seen in Oslo, in Norway, they are building power charging stations, and they're building a battery swap station, at least one, and they're building Nio House and sort of a shop and all that sort of stuff to maintain the cars. Infrastructure in Europe, I think, is actually likely to be better than in the US. Why? Because governments are putting it in. That's what we're seeing in China, right? The vast majority of all charging stations are put in by the government. There is a standardized plug. It doesn't really need to be done by all the brands. You can save that capex. Somewhere like Norway has a pretty fantastic infrastructure there. What they do need to put in, and they are hiring engineers for that, is the home charging. And again, that is a bigger part again in Europe, certainly in countries, I think, like Norway, where a lot of people live in in houses of relatively non-dense environments, they can put their own power chargers into their houses. Whereas in really dense cities, that is more of an issue, right? So, China obviously has a lot of those, I think 1,300 or something, like cities like that. So, not everybody lives in Manhattan. In Europe, there is a lot more space, like in a lot of the US as well. And therefore, I actually think you don't need as much infrastructure. I think the governments will solve that problem. Like, what we see Germany doing, they're basically mandating all petrol stations to put in chargers, and then you're done because they're already in great locations, and that's basically it. People have a home charger, and you don't really need much more. So I think Nio will focus on putting some battery swap stations in there, especially so users can upgrade from one battery to another and upgrade from these battery plans, and they can also get more subscription money out of them in the long run. So Eric M here, what's your opinion on Apple's upcoming electric car? I think it'll be good. I think Apple does a fantastic job in terms of design. My bet would be that the Geely Foxconn joint venture is going to build it. Why? Because they are set up and are intending to build car brands for others, and Foxconn, of course, already Tesla's in-house supplier, essentially. And so I think, to me, that's the most likely one. However, I do think that is still at least 3 years out. Even when you form these joint ventures from that point onwards, still really launching a mass-produced car is a good 3 years. So I think it'll take them a bit of time. So I don't think it's a huge issue for the very near future. Dixon is saying, from what I learned in school, inflation ultimately gets reflected in CPI and housing price, and the asset inflation only for short term will ultimately rotate into our lives, says Dixon. Dixon, I was taught the same thing. I studied economics at university, and I was taught exactly that if you have M2 going up, that should bring you inflation. Now it hasn't. And where is our inflation index? CPI, where did it go? CPI economy, that's where we're in the wrong one here. US inflation. So if you look at that, here you can see the M2 is the orange line, right? That is money printing. We can ignore the arrows for the moment. And the blue line is CPI inflation. So why are there arrows in here? Because I was trying to draw on things earlier. So where we see where these green arrows are, that's where the government increased the speed at which it was printing money, for example, in 2008 to undo the crash that we had here. And did it cause inflation? I don't think so. I mean, just look at the inflation figure from 2000 onwards. Let me put this into percentage terms until now. So inflation is something like 55% or so over 21 years or so. And, where is the inflation? I just don't see it. If anything, this curve is flattening out a little bit. I just don't think it's going to come. I don't think it's going to come into the real world. Why? Because the goods that we buy day to day, because of the way things are manufactured and because of international trade, have become cheaper. All the stuff we buy today, clothes, garments, food, electronics, cars, phones, it's all become cheaper. Your phone bill is probably cheaper now than it's ever been. Most things are actually cheaper now than they were 10 years ago. And that has been advances in manufacturing and, importing a lot of things from countries with lower production costs, essentially. And even if that does return to the US somewhat, they will basically use, automation to make things at similar price points. So we were basically taught in economics that if you print more money, with some time lag, it could be as much as 18 months, you are going to see enormous inflation. I don't see it coming, to be honest with you. I'm really not worried about it at all. Because that money isn't going into the real world. It isn't increasing people's paychecks, right? There is nothing that's really more expensive. This is not an oil shock where suddenly, when oil was still the raw material of everything, suddenly everything became more expensive. Then you have inflation. Then unions ask for higher wages because your average daily spend has gone up. You need it. None of that's happening because basically our day-to-day living costs are going down, if anything. So where this money is going it's going to Wall Street. It's being leveraged and it's going into asset markets like stocks. And for me, therefore, what am I going to buy to hedge inflation? Stocks. Really simple. And then I looked at some articles earlier, and what's the number one recommendation here from Investopedia, which is a nice resource. They recommend TIPS, Treasury Inflation Protected Securities. What's the 5-year trailing return? 2.45%. I mean, that's absolutely appalling. I mean, really, stuff it under a mattress. You're pretty much there. Just buy the index. That's what I would say. And I mean, as always, guys, I encourage you, do your own research, do your own due diligence. I'm not here to give advice. I just entertain. And if you listen to me, you're basically listening to the goats, right? As advice. That's where this all comes from. So, please do come make your own conclusions. And of course, I also love it when you disagree with me, because I think it makes us all smarter. And that's actually what I'm really enjoying, I must say, our Discord community over here. I know I keep pulling that up because we disagree with one another. And that's really nice to see people throwing in different things into the mix, different research and resources. And that makes us, I think, as a community smarter. And it's also fun, and especially on very, very red days, it is quite nice to have our, investor anonymous chat over there. So, Dallas here, do you ever rest? I love your motivation, man. Thank you very much, Dallas. Very kind of you. And I love your SpongeBob logo there. That's fantastic as well. Amazon Bama BYD buy now. Tesla waiting for another drop, says John Keller. You're a bit late, no worries. I'm about to upload a video on Baba in a couple of hours. I've just recorded it. I've just done another Alibaba, a discounted cash flow model here, which I've uploaded on our Patreon. I'll give you guys a sneak peek. I put in really rather conservative numbers here for both growth basically falling off, assuming there won't be anything exciting coming forward and that e-commerce will slow. And for the margins, I'm increasing them ever so gently because from sort of 29.5 up to 36% because of cloud and Amazon's AWS has an EBITDA margin of 50%, and I'm here overall at 36%, sort of averaging out a little bit. And even with that, I think what is a rather conservative approach, I'm getting to a fair value of $305 there. So yes, I am still liking my Alibaba, I must say. Thanks very much for that question. That is a good one. If you want to download that, guys, do check it out. It's on the Patreon. The link is below as always. Dixon is saying, thanks for the clarification. Look, I mean, I'm not saying I'm right. I'm just telling you that's how I look at it. I just think all that money has, whenever we've had this printing, and we have had this for all the previous crashes, what has happened is that real estate has gotten more expensive, and all the things that the wealthiest people buy have become more expensive, right? 5-star hotel room prices, for example, have seen massive inflation. But your 3-4-star hotel rooms haven't. So you are getting that disconnect there. Why? Because what's happening is that the money is essentially going to people with money, and they are able to leverage that. They're able to have more free cash flow essentially, so they can put it into the stocks and into the funds, etc., that are then taking advantage of that extra money. They're enjoying the asset inflation. They're becoming richer from it, and the guys on the salaries. Their salaries aren't going up very much because there isn't any inflation. So unions are not asking for 5%, 8%, 9% increases like they did in the 90s, because there isn't really a justification for it, because inflation is, not a lot, if anything at all. So you're seeing that disconnect get bigger, and that's a social issue. But from a pure cold-hearted stock investor point of view, that isn't really your problem. you could say. I'm not saying that. I mean, I do think it is an issue, and it causes social issues in the long run. And so what the government is doing, really, if they really wanted to support the economy, you need to do a much more targeted, specific, intelligent handing out of dosh than this just pouring money everywhere. And quite frankly, all of it flows into the same Wall Street funnel. So actually what Hong Kong has just done, they've just done a new round of stimulus. The last one also, they gave everybody money, basically, or companies at least. And now they're handing out vouchers that you can only spend locally. I haven't seen them yet, but I think it'll probably be things like groceries and stuff like that that you can buy. So that's becoming a bit more targeted, because you are then forcing everybody to spend it domestically rather than spending it on Amazon. And secondly, you can't take the cash and put it into a brokerage account, because you're not getting cash, you're getting vouchers. So I'm not saying that is a particularly smart model. I think an AI company could come up with something much, much more intelligent. But I think really governments should learn to direct their powder more strategically, rather than just printing money at this scale. They could use, I think they could use a lot less money and achieve a lot more. Because if you gave targeted funds to those in need, not just everybody. And you could do that if you had a decent IT system, and the US government, I think, doesn't. Have a look at the Edgar system if you want to look at old SEC filings. That website is from 1994. It is absolutely appalling. So that's kind of the problem that they have. I think they're just not able to do it. If they were, they could probably do the whole thing with 10 billion or something, and we'd be in the same position. But that's just my rant on that. So Hannah, there, you just scooped out lots of Nio at $35. Thanks for sharing. And CCIV at 22. Interesting. Okay, so people are continuing to be somewhat bullish on CCIV. Let me reset that price scale here on CCIV. I'm kind of cautious on it at the moment because I'm wondering, sorry, we're on a month scale. That's why that's happening here. I'm wondering how much investors begrudge the company there. I've still got M2 on here. Begrudge the company, this sort of shenanigans that they've been up to, which certainly haven't made people very happy, issuing shares at $15 when the stock price is at 57. That is sort of, cutting people's legs off. So I'm wondering whether people will bear that grudge, or whether they'll forget about it and just think Lucid is a fantastic EV play in the long run. So thanks for sharing there, Hannah. Everyone's hypocrite says, when will Chinese companies trade more fairly compared to companies like Amazon? It's undervalued compared to Amazon. You think? I agree with you. It's what we call a China discount. I think a sentiment change perhaps amongst American investors, or if we I don't know, tie up all the financial journalists that write all this nonsense about Alibaba on a weekly basis. I mean, that's a joke, of course. I think the problem is really the press has been lapping up this whole Trump-driven anti-China agenda. The press has just gotten on board of it, including the liberal press, ironically, and that really hasn't helped. I think the China discount has gotten bigger on that particular stock. On Nio, bizarrely not. It seems EV trumps country of origin. I'm using the word Trump there as a bit of a pun. So, Cheesy say, where does this sell-off come in a perspective into sort of history? Well, have a quick look at the index. And I always say that to people. If you're freaked out by what's going on, look at the index and look what's been going on. And actually, it's just a blue line here. We don't need bar charts for this. And you can see, this is as far back as I can go, apparently so. Look at 2015, we had that first yellow line here, we had a bit of a crash there, right? If you'd bought at the height of 2015, for example, you would have bought this index at 5,100. At the bottom, you would have bought it at 4,200. So that's 700 points. Now we're at 14,000. Would it really have mattered in the long run, whether you'd bought at the top or at the bottom? Pretty much no. Okay, you would not have had a very happy 2016. It took a fair time to recover till August or so 2016. And now look at the more recent one, 2018, right? If you bought at the height of the 2018 market, you would have bought this at 7,900. Let's call it 8,000 for simplicity. I think, somewhere there. At the bottom, you would have bought it at 6,300. You would have really had to try quite hard to catch that dip, but maybe you would have done. Again, in the long run, what's the difference here? It's, okay, it's 1,400 here. So it's 10% off, but that's only 2 years ago. So it still only makes a 10% difference from your starting price. And you would have been back at that starting point anyway, 4 months later. So in the long run, these dips become irrelevant. And I think that's really something to bear in mind. Of course, it's nice to buy near bottom of a market, but it doesn't really matter hugely. And if you hold something that isn't going to go out of business, and I think that's the big caveat, look at the companies you hold. Do you think they're going to go out of business? Have they got cash? Have they got free cash flow? Are they profitable? What are their margins like? What's the interest coverage like? Or if they haven't got cash, could they raise funds from somewhere? Well, in a crash, typically not, unless you have a government bailout, let's say like Nio. Now, Nio now has $6.5 billion US cash. That's quite a nice cash deposit for them compared to what they're burning through. So I think that's really why it's important to look at some fundamental numbers and just look at the very least, how much cash do they have? How much debt do they have? What's their cash burn rate if they're not profitable? What's their free cash flow? And just sort of look at that. And of course, also think about the business model. Is this something that's likely to get replaced? For example, if it's in a new industry, .com industry, 52% of all the dot-com companies went out of business. The original car companies, half of them went out of business. With EV companies, it'll be the same. I think it typically is. I can't see why it wouldn't be. So some of them will fall out of business. So I think diversification and patience, I think, is really what rewards us the most, rather than jumping up and down every day and trading 15 times a day. So Gary wants me to do a walkthrough through the bar by DCF. Gary, I've done a video on exactly that, Gary. So you get to enjoy that in a couple of hours, and I'll post you the link over on the Discord, Gary. Just have a little bit of patience, and I'll explain how I got there. If you have any questions, do ask me on the Discord. Danas, what's your take on options trading, longer versus shorter? Look, I mean, I think options are obviously a very valuable part of trading, particularly for people who are a little bit more sort of sophisticated and also are enjoying doing it. I prefer to buy a good stock and keep it for 5 years, 10 years, 20 years, because I pretty much know that there really hasn't been a crash that's where I haven't made a profit over a 20-year period. It's almost impossible to find that. So that's what I look for fundamentally. I try to look at fundamentally good companies. And of course, I also buy growth companies where the risk is higher because they're not yet profitable, but it isn't all of my portfolio, and I'm buying a number of them, and therefore I am, again, somewhat diversified. And if that does go kaput, it goes out of business, then well, so be it. I don't really mind. So in the long run, I think it's all fair and square. So I'm not an active options trader. Some of you guys have been asking questions about that. I'm thinking about doing a little bit of a sort of a seminar type thing on that, and I would then probably post it on the Discord. I think the first thing I'll do, because it's nearer on my list to the top at the moment, is I'll do a bit of a technical analysis kind of 101 to kind of get people a little bit more familiar with that, because I do think that is actually quite useful, especially when you're looking for entry and exit points, and you want to also just sort of soothe your nerves a little bit. I think that is quite an interesting one. So Alan Mang is saying that my opinion is that if your average cost is too high and you don't want to sort of discount down, buying options would help you make some money while you hold your long term. Not financial advice. Fair strategy, Alan. Absolutely. Bob Prague here, kaput. It's also a German word, of course, Bob. Daniel Alexander, I recommended the professional broker. If you guys some time ago invested with, I recommend it go. Alex Daniel. Okay, I don't know whether that's spam or not, Daniel, because sadly, so many people in the comments are posting phone numbers, which I think I've managed to block the phone numbers now through some clever little back end work, because I can't do them manually. It's just too many of them. So Albert is asking, how about Nio next week? So we had a quick look at that just now. From a momentum point of view, on Friday, towards the end of the day, momentum improved quite substantially. We actually got a buy signal there on a very, very short-term basis. So we're going to watch out on that on Monday morning. And of course, guys, I will cover that as well. Monday is also an exciting day because Xpeng's numbers are out, earnings call is out, and that will also have an impact on the whole Chinese EV scene, in which Tesla is included, in my view. I think Tesla is becoming a Chinese EV player because as of Q2, I think they're going to sell more cars in China than in the US. So Liddy's asking, what do you think about Nio hiring battery experts in Germany, Munich? I think, Liddy, I appreciate the question. I think it's kind of non-news because actually there are quite a lot of Nio staff in Munich, and they have been there for many years. So it's not like, oh my God, they just opened Nio Munich. They've been there for years, and they're basically tapping into the local knowledge there. Munich, of course, being home to BMW, for example. Mercedes actually isn't particularly far away either, but there is a big R&D community down there in Munich, and they are kind of leading the battery research field there together with the university. So that's why they're there. That's the same reason they're in California, because they are tapping into the local know-how, talented, smart people with great background. So I don't think it means anything particularly. Why are they hiring again? Well, they have got cash again, right? So they reduced a headcount everywhere in the world when they were running out of cash last year, which makes sense. Now they're sitting on 6.5 billion again. They are getting rather close to becoming profitable. Possibly beginning of 2021 would be my call on that. 2022, sorry guys, first quarter 2022, I think we might see a nice black zero. So I think that's really why they're doing that. They are reinvesting. So Abel, I like your YouTube channel. Thank you very much. I will appreciate that. Do smash that subscribe button, guys. And if you want to join our community and chat to us and see all these sort of discounted cash flow models and day-to-day chats, etc., not just on Nio, but also on other things, do join our Discord channel there. Lots of interesting thoughts and ideas we share over there for all sorts of stocks and things, even crypto and dividend investing and basically whatever you're interested in. We're chatting about it all day long. So do join us over there. Right. What do you think is a fair price for Nio once they're selling internationally as well as the US? Okay, so I have a discounted cash flow model from yesterday on here on our Patreon. So let me just open that up for you guys. I am at the moment, and I should explain this very briefly. So this is basically the interesting part. Ignore all my other numbers for now. Just look at this in a gray area here. I'm looking at revenue. So 2020 revenue in Nio. 2021, I'm essentially increasing it by 100% year on year. And these are the numbers of cars sold per year, which I'm putting in there, which I think they could sell in China only, ignoring any global expansion at the moment. And then my EBITDA margin, essentially profit margins, I'm saying 2021 still small, a loss, and 2022 we were starting to get profitable. And 2024 we're getting up to 19%. Now Tesla is around the 20% margin there with their EBITDA. Nio should be higher in the long run because these are more expensive cars and the margins on them are better, right? So you can play with these numbers if you want to change that number. So this basically gives me a fair value of $67. If I change my margin to say 23, I need to enable editing, to say 23% here, then that gives me an extra $10 in fair value very, very quickly there. So you can play with these numbers and you can sort of see where you're coming from. Now, one thing I have put in here is in 2024, my cars sold numbers, I think, is pretty conservative. I have put in some subscription revenue from autonomous driving. And that calculation is a little bit roughly over here. I'm assuming 1.5 million Nios are out there that are capable of autonomous driving and that they will all pay 1,800 RMB per month subscription, which I think is likely. That gets me this figure here, 1,800 times 12 times the 1.5 million per year. I'm dividing that by 1 million because all my numbers over here are in Chinese renminbi per millions. Otherwise, you get too many zeros. It's difficult to read. And then that number, you could add it on top as revenue. However, the margin on autonomous driving subscription is going to be near 100% margin because what's the additional cost of adding an extra user to your cloud system? They've already bought the car and the chips and all that stuff. So there isn't much to that. So what I'm therefore doing is that I'm multiplying the revenue by 5 because otherwise I'm putting the subscription revenue in with a 19% margin. So I'm putting it in with a 95% margin, which I think is 19 times 5 is 95%. Yes, indeed. Margin. So I'm adding 162,000 million on top of this, and you can see that here at the top in my calculation very simply there, that plus Q33. So you can play with these numbers, guys. Do check it out. I think it's an interesting exercise to do really for every stock you're in, to just understand of how do we get to these numbers, how do analysts get to these numbers, and this is a fair value, so it's the halfway mark between my low range and my high range, and you could of course be on the higher end of that. And I do think we could go higher than that, to be honest with you. A, there is international expansion you just mentioned. And B, once we get out of this chip shortage in Q3 of this year, we might see volumes going up quite substantially. Because note here, I'm only allowing for 84,000 cars to be delivered in 2021. Most analysts are looking at 93 to 96,000, some even to 100,000 plus. So we have to see how much catching up they can do there in Q2 with the capacity coming on stream. So that's a very quick explanation there of where I'm with that. Right. You guys are talking about brokers. I'm still not sure whether those are genuine or not. Guys, if you post phone numbers on here, I remove you. It's very simple because those are typically spam. Guys, also, when you see replies to your comments and they look like they're from me, but they have a phone number or an email address, they are spam. I will never, ever post a phone number on a YouTube comment, especially not a US number because I'm based in Hong Kong. So these are gibber. I think most of you realize that. I'm trying my best to block them, but really YouTube needs to do something about that in the long run because they're bots, they're automated. They create fake accounts. They use my name and my image, but you can tell they are not me because there are no subscribers on that, for example. So you can tell it isn't me, I guess. But do watch out, please. It's happening on everywhere, basically. Lily is saying $80 to $100 by 2021. Lily, I don't disagree with you. I do these discounted cash flow models. Generally speaking, like to do them quite conservatively, so they give me kind of a base figure. If you look at where the analysts are, and again, I can pull that up for you guys here. I think the analysts are where it's just opening here. These are our analyst targets at the moment. They're at an average of $72, but the newer ones here, 85, 81, 70, 70, Jaiwa at 100 even. So, this average is getting dragged down a bit by people like HSBC and Goldman's, who are a little bit more conservative. I haven't seen Goldman's update yet, actually, since the earnings call. I'll have a look out for that. But even that is a pretty nice rally if we get to that. 2000 is good enough, in my opinion. I think I could do well to get back to 60. What's that program? Program, you mean the Excel spreadsheet? Is that what you mean? Let me know, Yago, there. I'll gladly answer that. Excel, absolutely. Which is better value now, Nio or Tesla? I actually did a video on that a couple of days ago. Not that many people seem that interested in it, quite frankly, but I actually think Nio is looking a little bit better from its fair value point of view at the moment. However, Tesla in the long run does have more businesses and more disruptive capabilities. But if you're looking at purely kind of conservative now numbers, Nio, I think, has gotten hit harder than Tesla recently. That's my view here. Just my point of view, as always, Christopher. Early Gaming is saying my average for Nio is 41. Would you say that's a fair average? I mean, look at what the analysts are saying. They're basically saying $72. Now, on average, right? That could be, analysts don't give you a date, but typically I would sort of say that's sort of 6 to 12 months out. So I would say that's a fairly fair average. Winston, you sold your PLTR on Friday. Oh no, that is something that, well, I'm certainly going to hold PLTR until, death do us part. Whereas our lovely PLTR. Kathy Woods bought some more of that. We were covering that this morning. What's happening to my charts here? Okay, that's because that's because I've turned my candles off. That's why they're looking so funny. I think what I quite liked about the chart on Friday is that this is why this is looking funny. So let me just load my PLTR chart, guys, because then it has my annotations in it. And if you want to see these guys, as always, these are on the Patreon. So what I quite liked about the Friday movement, of course, it wasn't a great day, but this very, very long candle here, and the rally above it, I'm just painting next to it, you guys can still see the candle. What I call the tail, the cat's tail of the candle, the very, very long one. I like that because it means that we hit a low and there is a very strong resurgence back into that stock. So I actually quite like that for a bottom. And we are still on this, you see this line I pointed in here? We are sort of day to day actually improving. So it doesn't look like it, but we are actually on somewhat of a sideways improvement here. So I'm feeling a little bit better on that, but I would like our indicators to become a little bit more positive in terms of momentum. And for this sorry story to turn around, PLTR just under 24 is not where it should be in my point of view. Dana says, in my opinion, Nio can easily 10x in 5 years. Tesla, I doubt it, says Dana's there. Thanks very much for sharing. P&G, good morning to you too. Hoping Nio gets back to at least 53 by the summer. I think, in all honesty, we are going to see a little bit of a recovery, but not a huge recovery because the delivery numbers month on month are basically always going to say 7,500 until we get to the end of July or sometime in July, or perhaps in the end of the second quarter, they tell us, guys, we've got a warehouse full of chips and batteries. We can do whatever we like. And this is our back order. Isn't it fantastic? I think you need a bit of a kicker there. You need a bit of a trajectory that gets us back on that. And at the moment, I think we're going to enter into a little bit of a sideways pattern. But you know what? I like sideways patterns. They're good to build lots of support lines. Do you think Kathy Woods will buy Nio, as Hannah there? Well, I mean, I'd love her to. At the moment, no. Why? Because her money pot is shrinking a little bit. And what does she do when her money pot is shrinking? She says she focuses on her core conviction stocks. And I'm very happy to see that she's buying more PLTR. That means she's buying that. So she's selling off things like Facebook and PayPal and Tencent. All great stocks, by the way, I think, but they're obviously not part of her sort of core 30, which she seems to have in her mind. That's what she was saying in an interview yesterday. So therefore, is she going to add a new company that is moving essentially in line with Tesla at the moment of the stock to it? No, I don't think so. She's buying more Tesla, and I think it makes more sense for her. And quite frankly, I think it probably makes the fund better. I think funds should really not have a lot more than sort of 30 odd stocks. I think you lose sight of what you're doing, but that's just my take on that. So Sadra there, good morning to you too. Thank you very much. If you enjoy our content, if you enjoy my content, guys, all you have to do is hit that subscribe button, turn on the alerts, make sure you join us for the X-Bank call. And if you want to join our community and chat and ask questions and get access to all the charts and discounted cash flow models and all the news that comes out every single day, it doesn't all make it into videos, guys. It's impossible. Do join our Discord channel over here, and you can do that through the Patreon link below. Lots of fun going on over here. So it isn't all about me, guys. It really isn't. It is basically the community creating lots of content here and chatting about what they're doing and what they're buying and ideas. And I chip in. I get all the messages on my phone. So thoughts on CCIV, Singapore Sling there. Thanks for joining our community, Singapore Sling. You are relative new to the community, and I really appreciate that support. CCIV, well, let's pull it up very quickly and just see where we are. It is on my list here somewhere. Here it is. I mean, from a momentum point of view, this isn't looking particularly pretty. I think I don't even really need to pull up any indicators to tell you that, just because the sell-off has been pretty strong. Let's look at Williams. Yeah, it's a little bit quicker. So from a momentum point of view, we got a sell-off on sort of 22nd, 23rd February, around about here. And from an MACDs, I was a little bit late to the party. Not good for very, very fast moving stocks, guys. MACD, a little bit too slow for things like as drastic as Churchill Capital 4 here. I think really what it comes down to is your belief in the long-term Lucid business model. Forget CCIV at this point, and just look at what you think about Lucid. Apps there, the guys running it, ex-Tesla. They had BAIC, the Chinese state-owned car company, was behind that originally. They have, of course, the Saudi backing there, who are very long-term automobile investors with Mercedes-Benz shares, etc. So that's all very positive. I think the cars are probably going to be fairly good. They have a nice new shiny factory. They have capacity. They can increase their capacity in the space there. So they've ticked a lot of the hard boxes. What they haven't done yet is rolled out a sizable number of cars from mass production. And that's kind of when you start to see tweaks and problems and recalls and all that stuff. So they have to go through that hard phase, and that's the riskier phase. So at the moment, the valuation for that is pretty steep, I would say. In the long run, having a pure EV American-owned brand, I think, is fantastic, and it should attract a lot of cash. There will be a bit of a period where people are still grumbling about what CCIV have done to retail investors by issuing shares at $15 when the price was at 50 or 60. So I do think that they cut people's legs out from under them on purpose. That's my interpretation of it. So a lot of people will kind of hold a bit of a grudge there, perhaps irrationally from an investor point of view, but they're not going to want to put money into that. So I think it'll take a bit of time. I do think in the long run, provided the cars that they put out do very well, this could be a easily as big a market cap as Nio, 60, 70, 80 billion. And at the moment we are at, what are we at? Does it tell us down here? 6 billion. So I think in theory, there's a long way to go. If they do the right things, I think they'll get basically earnings sort of 5-10 years forward, a little bit like what we saw with Nio at the beginning. So that's my rant there at CCIV. As always, guys, that is not financial advice, guys. This is straight from our goats. So hit the like button for our goats, guys. They get 1 cent for every one of your likes, and I'm aiming for March, so we're going to get to sort of $400-500 US donation to the goats and these lovely sanctuaries. So Jack Dorsey, yes, he just put up the first tweet as an NFT. Absolutely, Philco. Philco, to be honest with you, I saw you posted that, and it's absolutely super interesting. I think we might want to do a little bit of a separate coverage on that, but I'll just put it up quickly here. So basically, What is this all about? Well, there's NFT platforms. So they're essentially selling sort of digital art, and it's sort of like a blockchain. It's all a bit strange. You don't really actually ever get to feel, touch, or smell, or really own it. But this is what the Twitter co-founder has just done. Jack Dorsey listed for sale the non-fungible token for the first tweet ever made. And the bid on that was $1 million made by Justin Sun, the founder of Tron and the CEO of BitTorrent, P2P network there. And Valuables is an Ethereum-based platform created by Cent that allows users of Twitter to authenticate their tweets for sale to others. They're kind of like digitally signed copies, it's saying. So we're seeing a lot of art being sold like this. So Dorsey is a big fan of Bitcoin. So this is the first time he's shown an interest in Ethereum. Many people around the tech industry suggest that the recent boom in NFTs may partially explain Square announcement today that they would acquire the music streaming site Tidal from Jay-Z. A very smart guy there. Dorsey offering one of the earliest tweets for sale on Ethereum-based platforms should only add fuel to that fire. So I think really the play here is probably Ethereum. I think a small percentage of one's holding in Bitcoin and Ethereum can be useful. And Philke, you very kindly explained further that on our crypto channel here, that basically, Ethereum is where do you say that here? Basically, Ethereum transactions, there are more Ethereum transactions than Bitcoin transactions. They're faster. So it is a more usable blockchain than Bitcoin. Have you ever tried to send Bitcoin? It does take quite a while for that really to get sent. So yes, I did share with you here about Ethereum. I think it's an interesting play. I wouldn't put a whole portfolio into that, certainly not mine. But I think it's an interesting one to watch. I think there is a lot of interesting stuff happening in the blockchain side. It isn't all just about Bitcoin, right? A lot of it is just about the blockchain technology here. So this is a really nice example. And Philke, I really appreciate you sharing that with our Discord group first, and then also with us here on this live chat. Thanks very much. Good to have you on the call. Right, rich people will sell NFTs. Happy is saying that, lol. What do you thought about semiconductors? We covered that a little bit yesterday. We were talking a little bit about semiconductors earlier and about the shortage there, Saka. Lucid so far is Nikola 2.0. Yeah, I mean, the chart actually looks very much like Nikola. That is kind of a bit of a point here. I'm not making a physical comparison between the two, but if you want to see what, obviously there are different timings, these two, so it's a little bit harder to make the, that's percentages. But what Nikola did here with this, and I should have put them in, sorry, I need to put that in at a different scale, otherwise you can't see what I'm talking about. New price scale, here we go. So orange is Nikola, the green and red is CCIV here. And what you can see is that they did fairly similar things here, right? In terms of that rally and then the sell-off. So, we went up, we went down, and then we went a long way sideways till we sort of recovered a little bit, and now we are actually further down. And that's pretty much what we've done here. We're going down, and I do actually expect us to have a fairly substantial period where we are going to sort of trade around here until we eventually recover again. If Lucid really prove the case and then bring up brilliant cars and a great success, then I do think this thing is going to fly off the handle. But until then, I think we might need a bit of patience. So thanks for covering this, Philke. No, I really appreciate your thought there. I was actually talking about this a couple of days ago, which is hence my interest in Ethereum. Meteorite, thank you very much, guys. Thanks for the very kind comments. Do guys hit that subscribe button and come over and join us on our Discord, and you can chat to the community more, which is good fun. So post your thoughts on ETH, guys. Thank you. Hedge Nio with BYD. Price is pretty good for BYD to get in now, you're saying. BYD is interesting there. I might do a video on that, Hihiman. Thanks very much for the suggestion there. Guys, I'm going to wrap this up here from Hong Kong. It is late at night. I really appreciate you all tuning in. I really appreciate your support. We are approaching 14,000 subscribers, which is really tremendously exciting. We've only been at this for about two and a half months or so. So thanks very much, guys, for all your likes, your shares, your follows. Of course, everyone who's joined our membership and our Discord channel here. Lots of you guys on here. Philco, Singapore, Sling. I saw Emma earlier. I saw Gary, and I think you guys might have seen Desmond Danners. Lots of you guys on here. Thanks very much for all your support, guys. If I missed any of you, apologies. And thanks very much for tuning in, guys. It's a wrap here from Hong Kong. Good night or good day to you.